The first feature of partnership is two or more than two persons. Two or more persons. Obviously, the underlying factor of a partnership is the presence of two or more joint owners of a business. So, for any partnership or any business to be called as a partnership business, there should be a minimum of two members and they can extend till 20. Now, students, remember the maximum limit for number of partners is not mentioned in Indian Partnership Act 1932. Rather, it is the Companies Act 1956 which limits the number of members in a partnership to 20. So, minimum is 2 and the maximum number of partners is 20 in case of any other business but in case you are carrying out banking business, then the maximum number of partners is restricted to 10. So the basic feature of partnership is that it should have two or more than two partners and the number of partners can extend till 20 in case of any other business, but in case it is a banking business, then the maximum number of partners should be 10. Now students, the second feature of partnership is agreement. Obviously, any partnership or any joint ownership or joint running of anything would be based on certain agreements or parameters decided beforehand. So, any agreement or any terms and conditions that have been settled in among the partners before a business is started is called as a partnership agreement. Now, this agreement can be oral and it can be written. Oral agreement is equally valid as a written agreement but is not preferable because in cases of dispute it is very difficult to prove the terms and conditions that were settled on that particular date because there is no proof in writing. Coming to written agreement, remember written agreement is also called as partnership deed. We have done that in 11th class business studies. Partnership deed is a written agreement among the partners which specifies all the details relating to the partnership that have been agreed among the partners. Now, coming to the next feature. The next feature of partnership business is the business itself. Remember, for anything to be called as a partnership business, the core and the fulcrum is the business itself. The business that the partners have agreed to carry on should actually be a legal and a valid business. It should be legally sound and legally accepted business, right? So if the business is not there, any agreement among the partners would be de facto taken as a void agreement, right? So for any partnership to exist, the business is the fulcrum and for that business there should be an agreement. It cannot be the other way around, right? You cannot have an agreement without having a business. So in that case, agreement will have no meaning at all. So students, the business is the basic motive for which a partnership should be formed or it can be brought into existence. Then we have profit sharing. Obviously, when all the partners are contributing with the resources in material and in physical form, they are contributing through their efforts and through their physical abilities and in monetary terms also through capitals and all. So they would expect certain share of profits. This share of profit is agreed among the partners on mutual basis. It is decided among the partners on mutual basis. They can be on the basis of the capital contribution. They can be on the basis of certain special efforts that a particular partner is putting in. But remember, there is no legal compulsion as to what should be the profit sharing ratio. It is entirely the domain of the partners to decide what ratio they want. Then students, liability. Remember, we all know that in case of partnership business, the liability of the partners is unlimited. But remember, they are jointly and severally responsible or liable for the liabilities of the partnership. That means they are jointly responsible to pay off the liabilities in case the business is declared bankrupt, and in case any of the partner is also declared bankrupt, then they have to pay his share also in case they are solvent. So they are jointly and severally responsible for the outsiders to pay off the liabilities of the business. And lastly, we have mutual agency. What do we understand by mutual agency? Now students, mutual agency is a simple understanding whereby a person binds the other partners through his actions. That means one partner has the right to take any decision regarding the business for which he has been dutifully entrusted through partnership deed. Once he takes that decision, the other partners are also bound by his actions. They cannot claim ignorance or exception from that rule. Like for example, let's say there are three partners in a business, A, B and C. C is authorized to deal with banks and that is written in their partnership agreement. Now without telling A and B, C raises a loan of 50 lakh rupees from the bank and runs off with it. Now A and B cannot go and claim that they had no knowledge about it. They would be responsible to pay off that debt to the bank, as there is an underlying principle of mutual agency. C through his actions has bound A and B to honor that agreement. Right students? So mutual agency exists for all partners through which they can bind other partners by their actions.